Hello everyone and welcome back. Alright, so today a big old company named Walmart decided to report earnings. And they were actually quite well. I'll read them to you and then we'll go over it and discuss the stock and see what the aftermath was of Walmart's earnings report. So without further ado, let's read this report. So it says here, Walmart shares surged as holiday sales crush estimates, boosted by e-commerce growth. So Walmart's earnings and sales for its fiscal fourth quarter top analyst estimates. E-commerce sales were up 43% during the quarter. The retailer maintains its sales outlook for fiscal 2020. Walmart on Tuesday reported earnings and revenue for the holiday quarter that topped analyst expectations, as its e-commerce sales surged 43% thanks to more shoppers using its online grocery delivery service and spending more per trip. CEO Doug McMillon said a favorable economic environment has been helping Walmart grow sales and take market share from rivals, including in food and toys. That's probably from Toys R Us going bankrupt. Walmart beat after dismal December sales data released by the Commerce Department last week put a damper on the retail industry and sparked some concern that Walmart also suffered during the holidays. But the retailer's results on Tuesday show shoppers continue to flock to its stores. Walmart also benefited from food stamps being released early because of the partial government shutdown, giving sales a last-minute boost. To us, the consumer looks like they're in pretty good shape, CFO Brett Biggs said. Gas prices are down. We're always monitoring the consumer and are ready to act if things change. But we feel our guidance is good for the next year and our business model works well in the environments. The company said it's maintaining its sales outlook for 2019 as it raised its annual dividend payable to shareholders on May 1st by 2% to $2.12, up from $2.08 a share. Walmart shares were up more than 4%, trading around $104 Tuesday morning on the news. Here's what the retailer reported for the fourth quarter of fiscal 2019 compared with what analysts were expecting. Earnings per share, adjusted $1.41 versus $1.33 expected. Revenue, $138.79 billion versus $138.65 billion expected. Same-store sales in the U.S., up 4.2% versus growth of 3.2%. That was a really big beat there. Walmart reported net income for the quarter ending January 31st of $3.69 billion or $1.27 per share, compared with $2.18 billion or 73 cents a share a year earlier. So that's substantially higher, including one-time items. Walmart earned $1.41 per share, 8 cents ahead of analyst expectations based on a survey. Revenue climbed by nearly 2% to $138.79 billion from $136.27 billion a year ago. That came in ahead of expectations of $138.7 billion. Sales at Walmart stores in the U.S. operating for at least 12 months were up 4.2%, topping expected growth of 3.2%. The company said traffic at stores was up just 0.9% during the quarter, compared with the growth of 1.6% a year ago. The average shopper's ticket, however, grew 3.3%. A year earlier, the average ticket was up just 1%. Online sales were up 43% during the fourth quarter, matching growth during the previous quarter. Walmart said that for the year, it achieved e-commerce sales growth of 40%, which it had been targeting. The company has been investing heavily in adding more products like celebrity-inspired apparel and high-end camping gear to its website in order to achieve that target and compete with Amazon. It's also been on a buying spree of online brands like Art.com and lingerie retailer Bare Necessities. Walmart didn't change its sales outlook for fiscal 2020 from last October. Net sales growth is predicted to be at least 3%, hurt by deconsolidation of Walmart's Brazil operations and reduced tobacco sales at Sam's Club. Walmart still expects net sales to climb about 5% internationally. Walmart is still calling for U.S. same-store sales to rise 2.5% to 3% for the year. Fiscal 2020 operating income is expected to decline slightly. The company is targeting e-commerce sales growth of 35% for fiscal 2020, which won't be as robust as what it was able to achieve last year. Walmart said Tuesday it will spend the most money on store remodeling, e-commerce initiatives, and bulking up its supply chain in 2019. Our fulfillment shipping costs are improving as we continue to enhance our online assortment, McMillan said on a call with analysts and investors. Repeat visits should increase and contribute to improving profitability. As of Friday's market close, Walmart shares were up about 7% this year, bringing the retailer's market cap to about $290.5 billion. That's compared with rival Target, which has watched its stock climb about 9% this year, bringing its market cap to $37.7 billion. Target and Amazon shares were both up roughly 1% Tuesday morning on the heels of Walmart's upbeat earnings report. Okay, so if we take a look at the stock, so the stock is at $102.20. It's up $2.21 or 2.21%. So let's break this down a little bit. So obviously, huge beat on the e-commerce growth. That was really high. The e-commerce growth was absolutely insane. That was really high. Obviously, the EPS was a pretty good beat. Revenue was a beat as well. Everything came in really well. The same store sales growth was up over 1% above what analysts expected at the 4% mark instead of the 3% mark. So obviously, huge beat for Walmart. Really big. They upped their dividends a little bit by 4 cents. They pay annually, so only once a year. So now their dividend is $2.12 with a share price hovering at 102. That's off the top of my head about 2.10%, right? Yeah, that's about 2.10% dividends. So not really much of a dividend play there, but I guess it's starting to become a dividend play with the stock going up another $2. The stock is closing in on a $300 billion market cap, quite high. I mean, not super high, I guess. It's Walmart after all, but $300 billion for a retailer is pretty high. I know there's Amazon, but Amazon's an anomaly, and they're Amazon, so they get a pass. They're much higher than Target, so they have a forward PE of 21, which is kind of high, actually. I mean, they did grow quite a bit this quarter, but I gotta say, I don't think I'd personally want to pay 21 for Walmart. It's not my cup of tea. I'm not a huge retail investor. I don't think I've ever bought a stock in retail, and I honestly don't plan on it. It's not where I think my money is best parked. I'd rather park my money in a company that has higher growth. For me, for Walmart to become a $600 billion company, so to hit a share price of about $200, that's going to take a long time for Walmart. A long time. I don't think Walmart's going to hit that for a minimum of 5 years to probably more like 10. So I wouldn't be parking my money in Walmart anytime soon. I wouldn't touch this stock right now. I think Target is a better buy, actually, if I had to pick between Walmart and Target. Maybe I'll compare the two, but I wouldn't really touch Walmart. If you're a Walmart investor, that's great. I mean, this was good news. But the thing is, if you guys are a young investor, guys or girls, and you're watching this video, and you're a fairly young investor, I'd say under 40, I would suggest not really putting money into Walmart. You can buy, sure, a little bit. I mean, you can buy a lot. It's your money. You can do whatever you want with it. But my advice would be not to buy Walmart. Not to buy Walmart really at these prices. At the 21 P for Walmart, I think it's a little high. They're going to be around, in my opinion, for easily the next 10, 20 years. But if you want to park your money in Walmart, that's fine. I just don't think you're going to see very much returns. There's a lot of stocks like that are very slow growth companies that are really not going to grow that quickly. They're kind of as big as they can get in a way. I mean, Coca-Cola, Procter & Gamble, these companies are companies that will continue to be around. I have very little doubt they will go bankrupt anytime soon. However, the issue with these companies are there's only so many people that will use your products, and it's hard to grow these products. The only way they're really growing these products is if they make new products, which these companies don't do too often. Walmart's not really making new products. Sure, they can get into their lingerie like they were saying with Bare Necessities and the art company they bought. That's great and everything. It's always good to innovate and continue to find new ways to make money. I completely think that is a great idea on Walmart's part. However, I just don't see the company growing much. If you want, you might double your money in about 10 years. I just think there are better options out there in the stock market than Walmart. It is a very safe play. If you're over 40, in your 50s, 60s, and you want a safe stock that pays a pretty, it's not like an abysmal dividends. It's not the greatest dividends at about 2.10%. It's not a bad dividend. It's pretty good for a Walmart. So if you want to do that, sure, do that. That's not a bad dividend play, I guess. It's decent. You make 2% on your money. That's fairly good. Again, there's better dividend plays out there, but Walmart's a pretty big American staple of a company, and it's really safe, right? I don't think Walmart's going to go anywhere anytime soon. Also, there was a report that for the past dozen plus times Walmart has reported earnings. In the next 3 weeks, the stock has pulled back around 5-ish%. So if you are looking to get into Walmart, I would suggest not making a position right now. Just for not only that simple fact, but because it is a little high, and I think Walmart will eventually do a pullback once the euphoria of this earnings report kind of dies off. Walmart more than likely will have a pullback. So if you're looking to get in on Walmart, I suggest waiting. Just sit on your money for now, and then when the time comes, I would get into Walmart if you plan to get into Walmart. As of right now, the stock over 100 I think is expensive. I wouldn't pay that. I don't think I'd pay over 90 for Walmart, to be completely honest with you. I wouldn't really touch that stock right now at 100. I wouldn't touch it at 100. I would maybe only touch it under $90 just because, if I gotta quote Warren Buffett here, whether we're talking stocks or socks, I like to buy good quality products at good prices or bargain prices, right? So when things go on sale, it's time to buy. That wasn't a direct quote. I'm no Warren Buffett, so I'm not going to even try to direct quote him, but more or less that's what he said. So same thing with Walmart. It's a good quality company, but I don't want to pay high stock prices. I don't want to pay high stock prices for any company. I don't care what company they are, and I'm not going to pay them now, and I plan to never pay them in my life. Hopefully I succeed. I'm trying. Once we get in under 90s, I would have to evaluate the stock a little bit more if I were to want to get into it, but it's not a stock on my list. I have stocks on my list. Maybe I'll show you guys my list one time, but I have a list of stocks that when they get to prices I like, I start to buy into them, okay? And if they go lower than that price, then I start to buy more. The unfortunate thing is I don't have millions of dollars to invest or anything like that, so I can only invest a little bit of capital, right, at a time. So then the capital I do end up investing, I don't want to invest into a stock I don't necessarily love, right, at a price I don't like. Exactly. So if I'm going to buy a stock, I'll try to preferably buy it at a price that I think I like or is fair, and a company that I like / and or love. Obviously I make more riskier plays once in a blue moon, but for the most part, that's how I kind of invest. And Walmart is a company that I use Walmart. I go there all the time. I go there probably every few weeks, but I don't love their stock. I like the company. I don't love the stock. Companies and stocks are two totally different things. I could love a stock but not like a company, and vice versa. I could like a company but not like their stock. It happens all the time. I like Coca-Cola. I think they're a great company. I wouldn't buy their stock because their P is like a 20. I don't think their growth should be anywhere near that. I think their P should be like a 15. It's plain and simple. I wouldn't pay that. Maybe back in the day when Warren Buffett bought it, it was a much better price and a much better PE. But right now, I think it's a little high. So I wouldn't buy it. And that's kind of where I am with Walmart. I think it's high, and I wouldn't want to make a position in it just mainly for that reason. It's high. And if there is a pullback or some type of recession, it won't get hit super hard, but it will get hit nonetheless. All stocks will get hit. And for Walmart, in my opinion, to claw back is going to take a long time. So there's a lot of talk of, people saying a recession in 2020. I'll give you my thoughts on that another time. There's a lot on that. So if Walmart ever gets hit on that recession and they pull back huge, I think it'll take you quite a while to claw back to 100. Like years, okay? Depending on obviously how big the pullback or recession is. It could take months, years, maybe even never. Most likely it will. Walmart, I'm sure, can weather the storm. I'm sure they can weather most storms for many years, so I think they're going to be okay. But again, that's just my take on Walmart. Take it or leave it. It's free information after all, right? So if you liked it, then hey, why don't you like this video? If you found this video informative at all, thought it was interesting, anything like that, sure, like it. And also, if you like it, then it's not so hard to, hit that subscribe button. Just do it. I think you should do it, right? Walmart would probably want you to do it. I think so. God would probably want you to do it. Hey, Lord Jesus would want you to do it, okay? And if you want, you can turn on that bell notification to always get notified whenever I post the newest, latest, and greatest video straight to your feed, so you can see it on your laptop, your phone, your TV screen, your fridge, your floor. I don't even know where they're putting screens these days. On your toilet seat, tank, I don't know, mirror's gotta have something. Anyways, so you can see it on wherever you're watching this. And by the way, I always thank you guys for watching this. Appreciate it from the very bottom of my heart. It means a lot to me, more than you'll ever know. Until next time, guys, see you later and have an absolutely fantastic day.